Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your weekend edition. It's Friday. Goodness gracious. As I saw on here, people going, TGIF, absolutely. Future Trader. Cheers to a Friday for all of you. We're going Jefferson Ocean today. Apparently, it's funny, the first Jefferson Ocean I actually bought, they mature their whiskey on whiskey barrels that are on a boat sent around the world. That's kind of cool. Not this one, but this is Jefferson Ocean anyway. Cheers, everybody. Happy Friday. Whew. Needed that one. All right, today's trading week wrap up. Hope you all had fun this week. Quite a lot of volatility, and I decided to use AI and have some fun with the graphics here as I try to have fun with the graphics on it. I ran a few different pictures, and this is the one that I chose to go with, which has kind of still people panicking. I had a little financial firm in the background. What's funny about AI, I don't know if you guys have noticed this, but look at the AI picture, some of the pieces that we have here in this graphic. Let me see if I can get this to go without doing that. Come on. Where's my pen? A little dot. There we go. Notice right here, first off, this lady's head is offset. Number one, it looks like his hand is down her shirt. Number three, where is this leg coming from? I think I have like this leg over here in the middle of nowhere. This leg merges together and she has like 19 fingers on that hand. Plus they're holding hands, which is kind of cool. And then you have like shins that are over here. I just love AI. Fun. Anyway, hope you guys are doing well with my little evaluation of our crazy graphic that I used for today. So let's talk about what happened in our markets today. Then we'll do a little bit of recap for the portfolios. You guys know I wrote an article for barchart.com which said these are the 3 financial stocks I'm buying today. And a lot of you are like, the hell are you talking about? You're crazy. Why would you buy financial stocks, right? It's going through an absolute potential crime scene type of market. Is it bad? Well, look, everybody in their trading has to make trades based off what they feel, their comfort level, and their risk level. So I'll walk you through my trade, those 3 trades on JP Morgan, Bank of America, and Charles Schwab. But let me walk through our top 7 to start the day. Really, the highlight was not, the sell-off in crude oil, which I actually thought we'd see maybe a little bit of a bounce. We talked about that yesterday. No, we did not get a bounce today. Down 2.65% for crude oil. Tough part now is looking off to the left and saying, where is it going to go? Again, we have these 2 bottoming tails here for my new students studying trading and investing and financial stuff. There's your long bottoming tails here that go back to December 2nd as well as August 23rd of 2021. So I'm going to move this line up just a little bit to attach to those lows, and that most likely will be where we go if this trend continues on crude oil here. Today down 2.62%. A lot of red, most of the stuff red except for gold and digital gold, which would be Bitcoin. So there's your crude oil to start things off. Russell 2000, and we drew that little kind of pennant formation, a pennant flag, if you will. Typically, those things do break down and go in the direction of the impulse move, and lo and behold, I wouldn't say we broke it today, but we're coming right back down to those lows that we bounced off of just a couple days ago. Actually, been bouncing off of pretty much this entire week, and that goes back to December 29th. So if this does not hold, then you're probably going to see it rush very quickly to the bottom end of this yellow box, which mine is slightly different than Tom's. But yeah, if it breaks out one, which is right around 1732, then expect it to drop fairly quickly down to these most recent lows, which is about 1645. All in all, an ugly day and a choppy week, right? At the end of the day, really wasn't that much of a decline for the Russell. I will put a little line on here real quickly just to give you the weekly declines for Russell, which was from Monday. Let's see, you opened up here on Monday and we close there. So that is for the week. Russell down. It's weird. It's not even giving my percentage. Something happened with my labels here, so we won't do that. But it should give you the percentage on this bad boy if I double click it. Unfortunately, it's not giving me that. Why are you not showing my coordinates? And there you go. Price percent change. So 2.12% for the week down for the Russell, and you got 2.42% of that just today alone. So really lots of chop going back and forth. Tom says Midjourney AI art, it's more artificial intelligence. Yes, I agree. I agree. But it's fun, Tom. I think you would agree that playing with Midjourney and these AI programs that do graphics, the text side of things with ChatGPT is kind of cool, but I like the graphic stuff. It's funny how bizarre some of those graphics are. Like arms are melting together and the 15 fingers on a hand. Bizarre. All right, let's keep going up the ladder here. Dow was your fifth place finisher, down 1.3%. But again, look at every day. We started off Monday down, Tuesday up, Wednesday down, Thursday up, Friday down. So it's just up, down, up, down, up, down, up, down. That tells you that there's just a lot of indecision and people don't know what the hell is going on. And not great to end Friday on such a negative note. But all in all, down 1.3% for the day on the Dow. All right, we're getting close to the podium. S&P 500 down 1.14%. This looks slightly better, right? It doesn't have the slight chop that we saw with those other two indexes, the Dow and the Russell. You actually have, for the week, looking much more positive. I will start here from Monday and go to where we close. We actually had a gain for the S&P 500 of 0.71% for the week, which seems kind of strange given all of the really negative info going on for this market and the stimulus and Credit Suisse and First Republic and all these different banks. It just seems strange that we'd actually have an up market for the week, and we did for the S&P. All right, podium time. Really the best performer out there, NASDAQ, shrugging off most of this bad news, maybe because it means more money pouring into tech. If we go from where we opened on Monday to where we closed today, NASDAQ was up 5.32%. If you asked me at the beginning of the week, would we see a market of 5.32%? I'd say nope. Nope, I definitely do not think so. We talked yesterday about how this NASDAQ was coming into overhead supply. A little bit of a reaction to that today, but really not that much. Given how much the other indexes moved down, I really expected the NASDAQ to sell off more. It did not. So rather strong for anybody who's long on that NASDAQ. Good strength there. Now, here's where the good stuff happens. Those indexes were all negative on the day. Gold ripping to the upside. I mentioned 2,000 being my target. Shoot, we almost hit that today. You can see the intraday high on gold today was 1,993. So $7 away from actually hitting that $2,000 target. Big move up for gold and also for silver. There's your silver chart. I sold some $21 call options against my position in silver today. I have 2,800 shares of SLV, so I sold the 21s. It was fairly aggressive. Got like 23 cents out of it. So adding a little bit, an extra 1%. No matter what happens next week, my silver position will gain by at least 1% on money collected from those premiums. And if we get higher than $21, great. I'll say goodbye to my silver, and I will do it all over again. All right, let's go to Bitcoin. This is the real big story. I am still, I hate to admit it, I am still bearish on Bitcoin just because all the things that are facing it, historical patterns and all the uncertainty, but maybe just this market chaos, this fear of printing of money and fractional reserve banking and all of the other problems we have with fiat currencies. Maybe it's pushing more people into Bitcoin. I mean, today you had a 7.35% move, which I'm very happy about. Bitcoin is my largest crypto holding, so I'm not complaining at all. I kind of would hope it would drift down so I could buy some more as I have weekly buys on Bitcoin, kind of dollar cost averaging that way. But this was pretty big, and that actually lifted up. Let's go down here and look at the crypto space. You see a lot of positive numbers out there in crypto. Phantom up 18%. Atlas, I do own some Atlas, is up 13%. Hex, which is probably one of the biggest scams in the crypto world, up almost 10%. Bitcoin is the one you really want to pay attention to, which was up 7.11%. So all in all, our crypto market's looking great. You had a lot of big moves up in commodities like metal. Some of the ones that were not performing well and really got slaughtered today. Natural gas, again, bar chart put up a really good graphic talking about how this has been the most volatile year on record with like the most 7% plus moves in natural gas per day of any other year. And it has been absolutely wild. Kind of expected it to drop back into this yellow box area and consolidate. You're at the dead low of that one. So really curious to see where we open up Sunday night and start really getting active on Monday with regards to natural gas. But it was looking so good for a while, right? We went from $2 to $3 on natural gas, which obviously is a 50% gain in like 8 trading sessions. And now you've given back almost a good chunk of that just in a couple of days. Yes, you did, Rob. You missed gold and silver. Got to get here early, brother. All right, so let me go into the questions here just so I can get through this stuff. Allow me to have a sip of whiskey and cover the basis of this trade, the trades that I was in for that article I wrote for barchart.com. I'm all about transparency. I love it. So here's the question that came through, and I'm like, okay, fine. I really wasn't going to go over them one by one, but Gene says, how did your trades end up on the bank stocks? So as I ran through those numbers for you guys yesterday, part of the reason I thought that the banking sector presented some good investment opportunities goes back to blood in the streets and just things being emotionally overdone. When fear kicks into the marketplaces, that's where one of my favorite times, I rub my hands together and just say, okay, feeding time, right? Let's go help out these people who are suffering. Let's help out people who are in panic and in need, and they're just looking for somebody to sell their shares to. And I'll go, okay, I'm happy to buy those shares from you, but I'm going to use options to do that. I'll buy it at a discount, collect even more premium, and if it doesn't get down there, you have the comfort in knowing that your position was protected with that put, and I had the comfort of knowing that I'm going to be willing to buy that market much, much cheaper. So in the article I wrote, again, for barchart.com, there were 3 different ones. Let me see if I can, do I have it here? I don't have the article. I probably could post the article in chat for those of you who haven't read it. But basically I said, look, I want to go with the big banks because I felt that a lot of these big banks would be the recipient of some of this money flowing out of regional banks. It's this uncertainty of regional banks like Silvergate, like Silicon Valley Bank, like Signature. It's just an uncertainty there. So deposits were being yanked out, which is what caused the bank runs on things like Silicon Valley Bank, and moving over to the more established, bigger names, which may not have paid as much interest to customers, but have the safety of diversification. And also, you watched the tweet that I posted today regarding Janet Yellen being grilled by, I believe, the senator from Oklahoma. Hate to say it, but crony capitalism, there's crony finance as well, where the big banks are kind of protected by the Fed, FDIC, and the Treasury. And he was grilling Janet Yellen. She was squirming in her seat. And basically the senator from Oklahoma says, look, can you guarantee all the deposits for all of my citizens in my state of Oklahoma against any bank problem? She's like, well, if it's a systemic risk, then we really... And he's like, no, listen, I'm asking you, will you guarantee all of the deposits of all of my clients in all of my banks? And she kept dodging the issue, and it's very clear that the Fed is playing favorites. It's very clear that the Fed is going, a systemic risk bank, okay, we'll protect them. So for anybody watching this that might be nervous that has a lot of money, if you're in Joe's Savings and Loan, Costa Mesa Valley Bank, right? The Pleasanton Financial, those are going to be dumpy, small little ones that are not a systemic risk. So you should have your money in some of these big ones. Like if I put my money in JP Morgan, I really don't believe that the Fed would let them die under any circumstances. It's way too big. If JP Morgan went under, I think you would all agree that's a systemic risk. So put your money in a bank that has a systemic risk, and the Fed, the FDIC, will not let it fail. They'll guarantee your deposits. It's pretty much what Janet Yellen said while she was testifying in Congress. So there's going to be opportunities. That's why I chose JP Morgan. I chose Bank of America. And then I said in that article, let me find one that is caught up in the panic that really has nothing to do with this. And that was Charles Schwab. So let me walk you through the charts here. We'll start off with the one that's hurting me the most right now. And that's JP Morgan, right? So JP Morgan, I believe today had a pretty big decline, primarily because of their talk track of putting $30 billion into First Republic Bank, right? They're going to bail it out. Okay, fine. And that's good. You got to help out your peers. You don't want to have another bank fail. It was Bank of America, JP Morgan, and 11 other banks agreed to contribute $30 billion to First Republic so that they don't die. Well, today you saw it drop pretty good. And you can see here, this was my strike price, 132. I believe I did it last Friday, which would have been, it was back here. So it was last Friday when I sold those puts. And I did the 132s. I did them when they were at the money. And I collected $1.50 worth of premium. So ultimately, how did this trade work out? I sold 2 of the 132 puts, right? I collected $1.50 worth of premium. So no big deal. I collected $300 worth of premium. Fine. Since it currently closed at 125.81, and I am committed, I'm now going to be owning those shares at 132, I'm essentially down $6.19 per share. Again, I have 200 shares, which would give me about a $1,200 loss. But I collected $300 worth of premium. So ultimately, this trade right now, as it stands, going into the weekend, I'm losing $940 on, okay? So that's the first one. Let's see, Mark says, will JP Morgan have stock ownership rights and a seat on the board for their money? Probably. It will probably be some. If you're going to go and bail my company out, there's going to be some, okay, tell you what, we'll give you a little bit of extra cushion. You got to reward them for doing that. It's not just, hey, it's the systemic risk that could have, hurt JP Morgan. They're going to look for some money there. Remember when Warren Buffett bailed out Bank of America back in 2009. It was when Bank of America, see, it might even be split here. Let's go BAC, and I'll show you that on a longer term time frame. We'll go to a weekly here, and he bailed them out in 2009, and I mean, it was at the dead low. It was at the dead low, and I believe he got a ton of warrants. A ton of warrants, meaning it's kind of like an option where he has the right to buy the security at, and I think it was at $6 was his warrant price. And, you know, this might be one of the best investments he ever made because he was loading up down here in that $3, $4 range. And of course, for bailing out Bank of America, he was rewarded with these warrants. It gave him the right to buy more. So yes, I assure you that, JP Morgan, there was some perk given to JP Morgan and most likely Bank of America for bailing out First Republic. Yes. Yep, absolutely. So that's the first one, was JP Morgan. Again, I sold the 132 strikes. It closed at 125. I wrote the numbers down, 125.81. So those shares we put to me Monday morning, I will have a loss showing up in my account, if everything remains the same, of $940. I'm not worried about it. I will actually go and sell probably the 132 calls against it on Monday if the premium's there. We'll have to wait and see how that one pans out. But of the 3 trades, that's the one that a few people have been like, you're an idiot, you're getting hosed, you're losing money. Look, you can't call me an idiot until the end of that trade is done. Of course, you can always call me an idiot. That's fine. I have thick skin. I don't mind. Let's go to trade number 2. Right? I'm going down the list from that article that I wrote, again, for bar chart. So go BAC. So Bank of America, let's put this blue line where it should be, which was the $28 strike. I will make it right on the dot to 28. So today, I sold the $28 strikes and I collected 50 cents, right? I have 5 of those. So if I have 5 of those, that's going to be $250 of the premium collected. Not the most money coming in the world. That's fine. I'm not too concerned about that. Where we closed at today, though, is this. Why would you think that the little guy would do stupid, illegal things like the big banks? I assume I am the son of a credit union manager and a board. Well, it's not that I would assume that they would do something stupid. They just don't have the oversight. I don't think that they have the regulatory people looking at the smaller banks because of the repeals of those provisions from Dodd-Frank in 2018 under the Trump administration. Basically said, look, we got too many agencies, too many people looking at this stuff. Let's lighten the burden, remove cost a little bit, and that reduced the oversight on banks under $250 billion. So now the banks, not saying that they might do anything nefarious or bad, because obviously a bank wants to succeed, but they might have put themselves in investments which put the bank itself in a precarious position without really either knowing it or not having any oversight to say, hey, that's a systemic risk to your bank, right? I think that's where the problem was. So why would they think that the little guy would do something stupid? Well, I don't think it was a stupid thing. I think it was more greed, but anyway. So let's go to that Bank of America trade, figure out what the final numbers are. I was actually fairly happy with the way this one worked out. So if you think about it from a pure numbers perspective, I'm actually doing okay here. So I sold the 28 puts. I collected 50 cents worth of premium, which means my average cost is $27.50. So even though it's trading at $27.82, I was put those shares. So I will have 500 shares of Bank of America in my account on Monday morning. At this moment right now, I would I would be up 26 cents on that position times 5, makes me $125. So not the biggest gain in the world. Actually, it ends up being $160 worth of profit overall. So that is your second one. And then there's Charles Schwab, which I sold 10 of these because I actually thought this was the best opportunity. I sold 10 of the Charles Schwabs at 50. So that one was great. Today, you can see we closed at 56.41. I sold the 50s, which means I am not going to be owning those shares come Monday morning. I keep all of the premium that I collected. And since this thing was in so much pain right here, it was just a brutal day. I sold these on Monday, by the way. I sold them on Monday. I collected $3,490. I had 10 puts. I sold them at $349 a piece, which means, you collect $3,491. So on that little trade, those 3 trades from that article of financial stocks I'm looking to buy right now, I'm down $940 on my JP Morgan, and that's an ongoing position, which I will do damage control next week. I am up $160 on my Bank of America. Again, I will own 500 shares of Bank of America on Monday. I'll do damage control on that, let you guys know how that one goes. Since I made all these trades public, let's just keep talking about them. And then the Charles Schwab one, that's done. I'm not going to own Charles Schwab. Those options expired worthless. I collected the premium. So out of those 3 trades, as it currently stands, I am up $2,710, and I still have 2 positions open, which could either add more gains or potential losses, and we'll look at that next week. But anyway, I wanted to walk you all through that just so you can know. I know some of you are wondering what's going on with those trades and how they worked out. There you go. It's funny because nobody in the comments on the article says anything great about the Schwab trade, which was actually the big part of it. They all focus on the JP Morgan, which is down, like, oh, you sold the 32s. Oh, it's at 25 and change. You're in trouble. No, I'm not really in trouble. It's fine. It's okay. I'm happy owning JP Morgan long anyway. Will you put stops in or just sell calls? That's a decision I got to make this weekend, Margaret. I have a feeling because it's those 2 positions I feel comfortable with, JP Morgan and Bank of America, which, by the way, Bank of America is in talks and I believe might be the lead contender to buy Silicon Valley Bank's assets. Then I think long-term that bodes well for Bank of America. So I will probably just sell calls on those. We'll see what happens Monday morning. In a perfect world, what's going to happen? It'll gap up on Monday. I'll sell some calls at the money, collect a ton of premium, and if it goes sideways or drifts up, fine, I'll still make my money. The biggest risk is that it drops, and I need to do some evaluation this weekend because I don't believe that we are done with the financial pain, although I believe that the big names like JP Morgan and Bank of America and a couple others will probably weather the storm better. But that's all just an opinion at this point. You never know 100% which way things are going to go. So cheers. There's my trades and transparency. Godzilla, the monster, is coming this way. Really? I will love it. Tom says credit unions have auditors visit every year. I heard about it every year since 1974. I'm not sure on the regulations for credit unions, but I would imagine that if it's a smaller credit union, based off those Dodd-Frank pieces, it's going to have a little bit less oversight. Now, you would like to think, again, I mentioned yesterday, I actually would love to open up a bank. I think it would be fun. I look back in hindsight, probably one of the biggest regrets I have in life. It's not good to live life with regrets, but this is a big one for me. When I was in college, I had a gentleman, one of the professors there, his name is Jamal Munshi. Small, little Indian guy, brilliant, genius guy, one of my favorite teachers. He was one of those guys that he almost had no facial expressions, no emotions, but he was so smart and he called it like it was. First day of our finance class with Jamal Munshi at Sonoma State University, he says, if you guys start a bank this semester, I'll give you an A+ right now. You don't even do anything. If you start a bank today, and in hindsight, he's a kid in college, you're kind of like, I don't know how to start a bank, stupid. What I should have done is I should have sat down with him and said, all right, how do I go about doing this? Because I think life would be very different if I opened up a bank. I think it would allow me to do a lot of things that I want to do, which is help people grow their money, and maybe even hire the right departments that actually have interest in helping people succeed. That would be a way different bank, and I don't want to take a lot of risks. Again, I'm not a bank owner who's going to try to make $100 million a year. Just give me enough to be comfortable on and pass the savings on to my customers, or keep their rates of return equal that they get with other banks, but the profit actually comes out of my pocket. So keep things safe. Anyway, I didn't start the bank up, unfortunately, and that's how it goes. So there you go. So there's what we've got for the week. How much time do we got? I'm already 24 minutes. Whoop, whoop. Halfway through today. Let me know if there's something that you guys want to discuss here as I go through one more question that I kind of have nothing else to do. Well, I have a lot to do, but I am going to go and have a fun evening tonight. So real quick, let me share this one. I know I get questions like this every now and again. It's rather basic, but let me just touch on it anyway. Tiffany says, I've been trading for 6 months and have really been struggling. Any advice for a newbie? Without knowing what you've done, Tiffany, I can't analyze your trades or look at it. One thing that I would encourage you to do is maybe go back in the archives of this show and look at a show that we did with a gentleman by the name of Ryan Watkins. It was about building a trading plan. That probably is one of the key pieces for you. So again, I don't know what you've been doing that has caused your struggles. You might be trading too much, too little, too aggressive, tight stop losses. I don't know. So number one thing I would say is have a plan in place and don't focus on the money, focus on making good trades. So that is my first piece of advice for you would be build a plan. Number one, start journaling and finding out what's causing you losses. If you look at this market, this has not been an easy market for anybody, right? I got a bunch of people here that are very active traders, and they'll probably say, yeah, it's been kind of difficult. You've had lots of chop. I mean, you said 6 months, right? So let me go put a vertical line where the last 6 months have been. We're in March, and so it probably goes back to September. Notice what's happened here in that 6 month window, right? You have a giant chopping back and forth market. So if you're bullish, this has been very hard, right? Very hard. If you're bearish, you've had a couple opportunities, but it's been very hard. It's just a lot of chop. What you really want is someone who's starting out is you want a market that looks like that. Give me some direction that's been like straight up or straight down. So that is the basics of what I can say. Is you're trading in a very challenging market, but unless you analyze and tell me what you're doing, how you're doing it, and why you're doing it, then I really can't give you pointers on how to fix the issues. So if you're more than welcome to send those on in here. I've got a big group of people here who are active traders. Some are very experienced, some are new. When I read your questions, you'll probably get some feedback from chat as well. So make sure that you read through the chat and see what's going on. Not just JB says the S&P is brutal. Absolutely. I mean, that was what I was looking at here. There's your S&P. I mean, that's just a lot of chop. You could look at almost anything though. Even if you're a Forex trader, well, Forex might be a little better, but here's, trading the euro. Yeah, you had actually decent trends over the past 6 months. You look at bond markets. So here's your 10-year, right? The last 6 months actually have been really choppy for bond markets. If you're trading commodities, lumber, sideways for 6 months. It hasn't done. I mean, have been big moves in there, but you don't get any real clear direction, which makes it very, very, very hard, at least in my opinion. So write down more, analyze Tiffany, and maybe you can send a follow-up here and tell me what you were doing. Kind of why do you feel you were struggling? And look at your trades. What were your biggest losses? What were your biggest gainers? All right? What were your smallest losses? How many small losses did you take? How many wins versus losses did you take? Those types of things will help you figure out what you're doing right, what you're doing wrong. You can even analyze the trades that you've made and figure out which ones are working and aren't working. For the viewers here, they know that there's one stock that I can't trade. I won't trade it. I will go from this day forward to my grave, never trading this stock again. And it has nothing to do with my ability to trade it. It's a representation for me. It's like a tattoo. And that stock is Apple. For some reason, back in 2000, I analyzed my trades, and the stock I seemed to lose money on all the time was Apple. So I said I can either do one of three things. I can continue trading Apple like I am right now and continue to lose money, so that's obviously not going to happen. Number two, I could analyze what is going on, maybe spend a lot of time, research, and effort to fix my Apple situation and maybe trade it better. Or the option that I took was, screw Apple. There's thousands of other things, and I can look through my trades and go, I'm trading this one successfully. Who knows why? I don't care, right? If it's Bed Bath & Beyond and I'm making money consistently with Bed Bath & Beyond, I'm trading Bed Bath & Beyond. Pepe was in here yesterday going, how much are you trading futures every day? I'm really not trading futures every day. I'll trade them occasionally now, but what's been working best for me has been options. So I'm going through that asset class that works best for me. So, you got to do the research and understand what's going on with yourself. All right, let me keep going through this one. Chase, Microsoft still has a gap to fill. The old Mr. Softy. Here's Microsoft. Bring that one up for you. He said Microsoft still has a gap to fill to 285. It's right there. You can see this little, actually it almost closed it today. Got really darn close. The topping tail today on this candle went up to 283, and you can see the origin of that gap is 286. So right there is where he's talking about. Think it may fill next week on strength in the NASDAQ? Yes, I do. Also, Shooting Star and NVIDIA today. Microsoft was strong to the close. NVIDIA sold off. So you had Microsoft a Shooting Star also, right? You have this long topping tail. It's not the perfect one, but I again think you're going to see a pullback here in the equity market. So I would actually be looking at Microsoft tomorrow or Monday. Put a horizontal line right underneath the low of today, which is here, which was, nope, that's not there. It's actually up one. There you go. It's at 276.62. If we open up on Monday above that and then start to drift down, great. Go for it and potential short opportunity there. Now, NVIDIA. I'm going to put NVIDIA in the not trade list for me because my bias is so positive and bullish for NVIDIA that I would have a hard time trying to short this one, so I'm not going to trade NVIDIA. You can see where it closed today. Your low is at 256.68. You had a huge rally up. It closed this gap, so it does look like NVIDIA would be a good candidate on Monday for a potential short from this point, based off a Shooting Star into supply, and honestly, just one of the better runs you've seen in these markets from December on. So if you go to where we were in December, NVIDIA's up 83%. There's not much out there that's up 83% in that short window of time. Liz, Merlin, can you talk about blackout periods on share buybacks that I believe companies are subjected to in the run-up to earnings? I have only recently heard about this and wanted to know more. I don't know too much about that. I know that with all companies, there is a blackout period before earnings, and I don't know what that is. Was it 2 weeks or something like that? When you see insiders selling, this used to be something I focused on. So if I saw insiders selling, I thought that was a sign. If I saw insiders buying, that was a sign. Insiders buying, I believe, is an interesting sign. We saw the CEO of Schwab just buy 50,000 shares the other day because he thought his company was undervalued, rightfully so. But if you're watching people selling, remember a lot of them are on an automated plan where they just it just says sell this much every now and again, and you can check the records and see that it's automated. It's not really market timing. They're just trying to scale out of anything over a period of time. With regards to the share blackouts, I don't know that much detail on that one, so I apologize. I know that there is a period, Liz. I just don't know exactly what it is or how it's structured. Fortunately, that one I don't know. JB says, I'm trading the 1 minute. 1 minute and trades used to work with a tight stop, 1 to 5. So I don't trade 1 minutes anymore. This requires a sip of whiskey. So the 1 minute time frame, if you look at it, can be very disturbing, distracting, and a lot of noise. So this is a daily, obviously. But if I brought NVIDIA down to 1 minute time frame, wow. Well, that last 15 minutes on NVIDIA was hallelujah, hallelujah. But there's a lot of chop and a lot of jigginess is the term we used to use as traders. Choppy, jiggy, whatever. It's just a lot of bad EKG, and a lot of this stuff will stop you out. So the challenge I had as a short-term intraday day trader, number one is I wouldn't trade. Well, let's do two things. I'm going to put goalposts here to show you when the market opened and where the market closed. So you can see it open right there. So that's this blue vertical line, and then obviously it closed right there. So between those two goalposts, that is the trading hours of the market. Typically, I would not trade this window of time right here. So I would trade the opening hour and a half. I would go away because what you get is this sideways chop that you notice here on NVIDIA. And a lot of times that will just take money out of your pocket regardless of what you're doing. If you're active, you're just going to be chopping back and forth and not a lot of moves typically. That's the problem with trading midday. They call it the doldrums. So I wouldn't trade this anyway. But a 1 minute chart, what I found, and this is a recommendation from one of my really good trading friends and mentor, he was like, move to a 5 minute time frame. So I jumped to that. And when I went to a 5 minute time frame, I find that I'm focusing on a bigger move. I'm not going to get whipsawed or jigged out by these small little intraday moves. So I don't go below 5 minutes anymore. 5 minutes is kind of the lowest time frame I use. And I used to be a tick chart trader, which everybody knows what that is. They call them a tick chart because it gives you a tick. I'll show you what it is right here. Let's see if I can bring it. Does it even have tick charts on here? Oh, I don't think it does. A tick chart, they don't have it. This is all based by time. But a tick chart is where every transaction is its own separate point. So you'd have this just crazy looking line that moves really, really fast. So there you go. I hope that helps there, JB. Analyze your trades, JB. If you find that you're doing really well with the 1 minute, then ignore everything I said. But if you find you're struggling and you're having a lot of stop outs, you're really small winners, then just take a step back to a 5 minute. It's a little easier to trade because, again, you're doing a 5 times greater time frame. It's a little bit easier to trade and set your stops on that one. How much time we got? Okay, perfect. Let's see. Dave says, hey, Merlin, I made my first options trade this week. I made towards the end of Tuesday. Couldn't sleep most of the night, sweating it. Overslept the next day. Woke up and found out it stopped out. I'm happy that you made some options trades. I don't know how that one actually ended up turning out for you. It doesn't sound like it worked out very well. But great. Don't sweat it. If you're in a trade that's too big, that's preventing you from sleeping, then you need to go to a smaller share size, right? Especially if you're starting out, go to something really small, right? Just trade one contract for a while, just to get comfortable. Maybe trade something that's not that expensive. So if you do take a loss, it's going to be rather small. For example, I did 2 contracts of Bank of America, 5 contracts of Bank of America. Big deal. I did 2 of JP Morgan. Not that big. I'm not going to get smoked. I did 10 on Schwab, which was definitely a bigger trade, but I felt more confident about that one, and conveniently, that's the one that worked out for me. So start with something small. You shouldn't be losing sleep over these things. Anyway. Hey, Merlin, let's keep going here. I'm reading the questions as they come in. Short-term upside on gold, oversold, poised for a drop. Now, that's a really good question, Tom. I obviously don't have the definitive answer, but if I look at the price chart here, right now, gold and silver are the shiny, happy one that everyone wants to be a part of, right? It's that typical flight to security. You have gold's up 10%, almost 10% in 7 trading sessions. Now, if I look at a weekly, just zoom out just a hair and go to the weekly time frame to see what's the big picture look like, it doesn't look, that incredible. It looks like it's just racing back up to these previous highs. This is GLD, by the way, not gold futures, which I can look at futures if you want. So, I would actually expect that there's going to be a pause as we come into these highs on like around 185 on GLD. So it feels like we're just about there, and that would coincide with the futures. Here's the gold futures coming into the high right around 2,000. So my gut tells me you have a little bit of a pullback, but the momentum and positive action seems to be there for gold. Like this seems to be a legitimate move that's going to push this thing even higher. We go to volume here. You had much higher volume than normal today on these futures contracts, which tells me that, so this is weekly. This is telling me that people are rushing into gold and wanting gold. The volume all week has been higher than normal. So, I would expect a little bit of a pullback, but the momentum right now says it's going higher. It could actually break even above that 2,000 mark. And if it does that, now where are we going? Well, you obviously have some highs that go much further back than that. Really the high here back in August of 2020, which is right around, the high there was 2,089. We could very easily hit that, right? And that would be your all-time high ever for gold, which I think is very, very doable. When you say AG chart there, you're asking me about silver? I'm guessing GLD might pull back after bank panic subsides. Maybe. I just think that, when you have these impulse and corrective phases, it's normal for it to take a pause and breathe and come down a little bit. But the way it's been going, it looks really good. Now, one other factor here, let's go back to a daily and bring up the dollar index here. The dollar index has been kind of choppy and no real clear direction either. And this certainly would have an impact on gold. If the dollar ends up breaking down here and starts challenging these lows back at 101, then gold and silver both could really take off here, which, all right, fine, I'd be happy with that. If my silver gets taken away from me by next Friday, great, fine with it. Trade worked out and I collected extra premium. The other piece here, which we have not talked about, is the 10-year. So the 10-year, again, down for another 4% today. Ridiculous. So if you're looking to buy a home, homes getting a lot cheaper here over the next couple weeks, simply because of the loans and the cost to you for the capital. The yield curve, which someone asked about earlier, here is your inverted yield curve. You are still significantly inverted, but it's screaming back up to normal, right? Which is a good sign. You really do want to see price get back, or this line get above the zero line, which would tell you that you're being rewarded for longer term maturities versus short term. That's the way it should be, which is what Silicon Valley Bank thought is, it should be like that. But look, it's been inverted for a long time. They should have gotten out of those trades a long time ago before they went insolvent. So this is actually a fairly positive sign here to see that 10-year closing the gap on the 2. Here's the 10 versus the 1, which is definitely getting better, but it's been underwater since July of last year. That is a very, very long time. Okay, silver mining company. Sorry, I use AG. When I hear AG, sometimes I'm thinking silver. I didn't think of the actual stock. So sorry about that one, Rob. So here's AG. Let me get that volume off of there. Look, if silver keeps rallying, obviously that's going to be good for any silver mining company's bottom line, right? You're going to see that the reward for their silver, they're getting paid more for it. So that's a pretty positive thing. Now, technically on this chart, I got to be honest, I don't like it, right? You know the way I think. Rob, what I'm going to say here. You have, since 2021, lower lows, lower highs. This thing has been making really no effort at establishing a new high. Of course, we all know that trends change. But the phrase I love to use, which if I got a tattoo, this might actually be it. It'd be weird where I got this tattoo, but I'll leave it at that. The phrase is, the trend is your friend until the bend at the end. So you notice we've got a small little double bottom here. Boom, it bottomed once on February 24th, rallied a couple days, came back down and bottomed, and now all of a sudden you got a breakaway gap, which it gapped up and has been running ever since. So this is a great sign for AG. The question for me is, well, when do I know that this thing has actually reversed its trend, right? For me, that would have to be when it breaks $9.80, which is a long way away from current price. So it's really hard to say, this has officially broken its trend. Now, we could do a couple different things. Obviously, you want a normal trend line you would draw like this, right? You want to go through the highs. So there's your high point. You can see it hits this second point on April 11th of 2022. And then we have our third point for contact, which confirms it's a trend line. And that goes into January 2023. So right now, we are technically hitting your downtrend line if you draw your trend line that way. Now, I'm going to draw it a little bit different here because some of us will not use this big outlier point like this. We might look at it from this perspective. And now all of a sudden my trend is very different. Oops, bear with me. I'm squiggling over here. It's the whiskey. Now your trend line looks like that. So it's going to look slightly different. And this is why technical analysis is so difficult. It really depends on the person that's drawing it. Beauty is in the eye of the beholder. Well, in this case, beauty is in the eye of whoever's drawing these trend lines. So you can draw it either way. It doesn't look great at this point, but this might be that turn, the beginning of the end. Again, I think if you bought it on Monday, Rob, you definitely jumped the gun and bought early. You bought it, as it bounced out of here, so that's fine. You actually bought it right here. There you go. After the big jump up. So it's actually pretty good. I think it's actually really good that is making that kind of move. I think you're in a pretty good position here, especially if silver keeps rallying. What I would do is I would probably put a trailing stop, and I would put it below the low of the previous trading day and just keep moving that one up. And the main reason for that is you don't want to get caught if this thing comes screaming back down. For whatever reason, silver did take a hit. Here's SLV. Right, silver did take a big drop from 2250, fell all the way down to 1840. If that happens again to that extent, then you might take a big loss on your AG share. So I would say be careful there and move away. The rollover caused a gap. In a lot of these markets, it makes for tricky trading for me and for everybody. That's one of the problems I hate about, when I look out here and I give you guys the market update and overview, I'm generally looking at these index or these futures products, right? So when we get to the rollover, I generally switch over and I'll just do instead of the S&P 500, I'll look at SPY just so I can eliminate that gap, the big futures rollover gap. Yeah, it is challenging, that's for sure. No problem, Rob. Happy to help. I think I got pretty much everybody's comment here done. Let's see. Dave, I tended to be a typical attacker. Mike says, I'd like to know what Merlin thinks about any product being held over the weekend with a definitive stop. Well, I'm not a fan of holding things over the weekend. I don't like holding things over the weekend. If I do, it's generally going to be diversified. In this case, I'm now stuck with JP Morgan and Bank of America, right? So if we have an implosion in the financial system come Monday morning, I'll probably take a bigger loss on JP Morgan and Bank of America than I wanted to, but you just never know. Right now, the world is covered in panic, right? It looks just like the picture I have up here at the top. There's my picture at the top of the show. There's your panic. People are freaking out a little bit as far as what's going on with this market, and I think that's going to continue. I don't think that the current actions performed by our government and our regulators are the pieces that are going to all of a sudden make everything great and rosy and look great again. Let me bring up another picture here. I'll show you the second candidate that I had for the bank run piece. This is the one that I wanted to use. I like this one. This is a fun picture here, but just the sheer panic and money flying. The first two people look like they're scared, but the guy behind him, that's Jamie Dimon, I think. The guy on the right over here with his demon eyes and just angry looking, and his shoe came off and his leg is missing. But I'll show you one more. Here's the final one that I made for today. This is my third candidate, where you kind of looks like the bank building is burning. There's debris everywhere, and I was gonna write, First Republic Bank here. Yeah, those hands are great, aren't they? That blows my mind how creepy those hands are on these people. She's her fingers are all jacked. She has two hands. She's got two hands, and this one over here is just, this dude's got 17 fingers. He can play the clarinet like nobody's business. He's such a virtuoso, right? Oh man, see what happens when you guys get me drinking on a Friday. Anyway, let me have another sip of this and I'll wrap up the show. Ganesh says, you missed mine. Why FRC is falling in spite of the capital infusion. It was trading at over $80 So I have not taken the time to look at First Republic's financials. And you would think that by getting $30 billion in funding to help you stay alive, that, okay, it's kind of like saying I've got a boat and I'm in the marina, I've got this boat and the boat is taking on water and everybody around you knows it, right? But they're like, hey, we know this guy. Okay, let's not let him sink. And everybody gives you money to fix the boat. Here's $30 billion to fix your boat. I think a lot of people are looking at that capital infusion knowing, and I think this might be where you and I, Ganesh, I think we're both guilty of this, right? You know they're getting $30 billion. You don't know how they're getting that $30 billion, what the limitations are on that $30 billion, what they're supposed to do with the $30 billion, and I think more importantly, is $30 billion enough, right? Is that $30 billion going to fix all the holes in that boat? Meaning, okay, you take that $30 billion, you fix as much as you can because you have access to it all, but there's still going to be some holes there. And I think that is what the industry is looking at and going, okay, well, even though they got that money, even though Credit Suisse got $54 billion, that doesn't mean that the situation is fixed, right? You can give somebody all the medication they need, but it doesn't necessarily heal them. And in this case, money's the medication to fix First Republic. So to me, that's kind of my problem with the First Republic piece. Let's go look at First Republic here, just so we can have that on our charts and discuss as opposed to my ugly mug. FRC. So here's what happened to First Republic, and I'll just kind of focus on the last couple of months. You can see yesterday the joy, the jubilation on the 16th, Thursday, like, oh, we got it, yay, we're looking good. And then today, I do believe it's the realization, like, well, we have not fixed the problem. I mean, you can imagine with the lotto. When someone wins the lotto, right, you're like, all their problems in life are fixed. They're done, this is it. You win $1 billion lotto, or let's just tell everybody, let's make a scenario for everybody here. Your life is exactly the way it is, and this Saturday, you win the lotto and you win $500 million. And anybody that looks at you is like, wow, your life is set. Your life is absolutely amazing. They envy you, right? It really depends on you whether your life is set. What we hear so often is people who win the lottery end up actually going bankrupt because they just do stupid things with the money. So in my mind, I'm looking at First Republic going, well, you were already screwed up to begin with. So now, are you going to change things? Or is that $30 billion going to go right back into the same bad practices that you had and lose that money? And so, again, there's a lot of uncertainty with what's going to happen with that $30 billion. I think, Ganesh, that to me, in my opinion, is what the problem was, right? It's, yeah, and right, more money, more problems. I like that, Rajesh. Absolutely. Credit Suisse got help a lot, but you think instinctively as market observers, as the average Americans, you would look at this and go, oh wow, yeah, Credit Suisse is going to be fine now. First Republic's going to be great, no problem. They got money. Maybe not, right? Do you trust the management? Do you trust the leadership? Given what's happened with their share price, I don't. So you're giving maybe people who are doing not the best things with that capital more money. And as I saw come out in here, which I do think you're probably right, paying bonuses, right? You go out there and pay bonuses themselves from Boss Pupa. Why? Pay bonuses, of course. Sure. I'm sure there's going to be some bonuses there. You just got a $30 billion capital infusion. It's like, you know what? I'm taking all my employees out for a real celebratory thing. No need to celebrate. You were a failing bank. Steve's always do stupid things. Let's just, yeah, exactly. They got a timeline. Sure, I'm sure they have a timeline. I'm sure they have a plan. I have not looked at those types of things. I unfortunately, there's only so many things I can look at in a day on top of all the other things I do and the show. So, Merlin, if you're using a 5 minute instead of a 1 minute, isn't it going to make your stop larger? Correct. It will make my stop larger, but it also makes my profit target larger, right? And I'm okay with that. Because remember, if you're not comfortable with that, JB, if you're trading a 1 minute time frame, you generally have to trade bigger share size. So let's say, for example, I'm on a 1 minute chart and I'm trying to catch a dime, 10 cents worth of move, 15 cents worth of move. I got to trade 1,000 shares. If I catch 10-cent move on 1,000 shares, I make $1,000. But if I switch to a 5 minute time frame, I'll be more selective in the trades. The supply and demand zones are going to be stronger if I'm looking at an intraday chart. But now I'm not trying to make 10 cents. I might be looking for that 25 to 30 cent move. And if I'm trying to make a 25 cent move, well, I'll trade 400 shares. I make the same profit. 400 shares on a 25 cent move is $1,000 worth of profit. 1,000 shares, 10 cent move is $1,000 worth of profit. Problem with shorter time frame is you got to trade bigger, you're going for smaller moves, and you get whipsawed a lot. And that's all I'm saying there. Again, maybe something to explore and play with for a little bit and just try something different. It's much more relaxing the bigger time frame you go. Right? Cheers to Bob Dunn. Bob Dunn didn't trade anything later than smaller than a daily. Much easier. You think he's out there sweating the details? He's like, I got days and weeks for this trade to pan out, but I'm going for the big move. Whereas if you're trading 1 minute, you're like, you jacked up on coffee and methamphetamines trying to make these trades because you're like, I gotta stay, I gotta watch, and you start going nuts over it. Relax a little bit. Go to that 5, go to a 15. Anyway, and again, I'm not trying to change your style, JB. I'm just reflecting from my style and my experience and how difficult it was for me early on when I was trading tick charts and 1 minute charts. We could certainly scale back a little bit and just relax and take those trades a little calmer. Again, this is an off-color joke, but I've been drinking, so it's fine. You guys, I've said this one before, the story of the two bulls standing at the top of the hill. And the longer-term time frame is the old bull. The younger-term time frame is the 1 minute chart. And the old joke is you got these two bulls standing at the top of the hill, and there's a field full of cows. And the young bull's jumping all over the place. Like, oh, I'm going to go down there. I'm going to have that cow. Oh, I'm going to have that cow. Oh, I'm going to have that cow. I'm going to have that cow. And the old bull looks at him and goes, youngster, you can go down there and have that one. Because I'm going to walk down, and I'm going to have them all. And I was like, ooh, as a trading analogy, I like it. I'll be more selective. I'll go for the bigger time frame. I'll take my time. Let the trades come to me. A lot less stress. Cheers to the bulls and Bob Dunn. But Bob used a fixed stop. Correct. Yep. And that, if you look at the fixed stop, that goes back to the turtles, which we did a show on the turtles a while back. Fixed stops. Yep. Which I think is important, but I think you want to have a stop, but you also have a fixed number, but try to tie that into a demand zone or supply zone. I think that you get that the confluence of those two makes it even better. Okay, swing trading is so much better for me and my stress level. 100%, John. For me, I can't argue that at all. I was a stressed out trader, highly stressed out. And again, I don't know if my book will ever come to market because I keep saying I'm going to write it and I'm not. Larry keeps giving me a hard time. So Larry, keep bugging me. I will get a book written, at least one of the two I've decided. But in that one book, I talk about an ailment, an injury, a stress-related injury that happened as a trader back in 2000 for me. And it's because of shorter-term time frames and trading way too big a share size. Doesn't look overbought. Let's go to Rob. One last one. I got to wrap up and get out of here. Got to go take my poor dog for a walk. He's been, look at that. That's nice. I like charts that look like this. This is Barrick Gold. Now, this is CFDs. That's not GLD. One second. Let me type that one in. There's Barrick Gold. Okay, there we go. That was a different asset there. So, the comment here, Rob says, gold, Barrick mining, does it look overbought? I would say no. You if anything, you are coming into this 1850 mark, which we could argue was a drop-based drop, right? And that's this little mark right here. However, I do like the fact you have this unfilled gap. You've got this high right around $20. It feels good right now that it's moving in the direction that it should be, which is the upside. We have seen a lot of chop here and downward moves since August of 2020. So I'm bullish on gold. Again, I do think that you'll see a little bit of a pullback, but you have a lot of factors here that could cause this thing to rally up. The big gap obviously acts like a magnet, but gold, the stock is going to move with gold, the actual commodity. So I would keep my eye on gold. Again, I do think that the commodity is going to have a little bit of a sell-off here and then challenge those all-time, not all-time highs, but challenge the highs again on GLD. We've broken that. So, you're coming into this next level. I do think that gold's going to take a little bit of a breather, and that may impact the gold stock. There we go. Daily uptrend for gold. Yep. Well, yeah, we broke. If you look here on gold, the stock, GLD, see, there we go. I'm getting all confused now. If you look at GLD, the gold ETF, you just broke this most recent high from back February 1st. That's very positive. Keep on going. You broke your pivot highs. Keep on trending. Now you have a couple more stops to contend with before you really see some big moves in gold and maybe even get us to all-time highs. The stock itself, a little bit different. GOLD. You still have those highs that go back into 2020. You have one that kind of goes back into March of 2022. But right now, both gold, the stock, and gold, the commodity, look great. All right, that's going to do it. I'm wrapping up. I gotta get out of here. It's getting hot upstairs. The AC I don't have AC up here, and for some reason this room got really warm today. So I will wrap things up like that. I hope you guys enjoyed today's show. Hope you made some money out there. We'll see how my bank stocks play out starting next week. We'll give you slight updates. I'm not going to make the shows about that, but if you have something you want me to discuss next week, let me know. I may even try to go look for some guests. I got a lot of other things going on, but I will try to find some guests for the show. If you like today's show, hit the like button. If you're new, as I know I've got a lot of new people here, I see a lot of new names, hit that subscribe button, and we will do the show. Well, I do the show typically Monday through Friday at 2 p.m. Pacific. Sometimes I bail out every now and again for some event. Even though I was teaching on Wednesday, I still managed to do that class. So cheers, everybody. Have a great weekend. Go do something fun. Go do something exciting. Live your life. Don't even think about the markets this weekend. Look at them Sunday night when the futures markets open. After that, relax. It'll open up Monday morning and have a lot of fun. Then I'll see you guys on Monday. Take care, everyone.